Appreciate you being here. This is our first online home buyer seminar. This is nice because we can get people from all over the area versus trying to bring them into an office to kind of like listen to us talk and ask questions. A little bit more convenient for everyone that's here. So to kind of get started, I'm Todd Schroth with the Todd Schroth Home Selling Team with eXp Realty. I run a local real estate team here in the Orlando area, and we've got April and Lawrence with us. I've been in the business 22 years, been around it my entire life. So this is kind of like second nature stuff for me. I enjoy the business. We've seen a nice market shift happening. So it's nothing new. It's kind of like back to normal, what's been going on versus the last, 2 years when it's been like crazy stuff. Lawrence, can you give us some introduction on yourself?
Yeah, absolutely. I'm Lawrence Heisler with the mortgage firm. I've been in the business a little longer than Todd. I've been 25 years doing mortgages, which means I got started when I was 5 years old. So I'm happy to be here. I know this is a crazy market right now. We've seen a lot of changes this year, and I'm just happy to be here to help whoever's on this call and talk about what's going on and what we do from here.
Awesome. And April, how about yourself?
I am April Addison. I am on the Todd Schroth Home Selling Team, one of the top producers. Been very blessed to be a part of the team and get under Todd's wing. It's been a complete game changer, life changer. Happy to be here.
Awesome. And April, appreciate that. And for those that are just coming in, if you guys have questions, do your hand raise on Zoom or pop a question in the chat, and we will definitely get to them. We've kind of got some breakouts, how we want to go through stuff, some insurance, inspections, closing times, finances, credit repair, kind of what's going on with rates, and then, what's the plan for buyer consultations, what that looks like. And, if you're 6 months out, what does it look like? If you're 60 days out and you want to get into something, what does that look like? So feel free, if you just think of something about inspections and we're on the closing time section, raise your hand. Just feel free to interrupt us and we'll definitely get to the questions that we have coming in. So again, appreciate everyone being here. Now, let's start with the financing because that's the biggest part. Lawrence, give us some guidance on what's going on with the markets right now.
Yeah, well, we've obviously seen rates going up this year. That's been the big thing in our industry. It's gone up at a pace that I think a lot of people weren't expecting. So what we're seeing right now is a lot of what we'll call creativity in our industry. There's programs that we haven't done in a long time, like the ARMs. There's a program called a 2-1 buy down that we're starting to see pop up again, where buyers can get into houses with a lot lower interest rates than what the market is bearing. And we're even seeing some programs that are costing points for the clients. And so these programs are starting to see sellers contribute more. It's kind of all hands on deck as far as mortgage professionals being able to really discuss financial options with clients, getting them pre-approved in a price range that they're, happy with, and, just working all the angles to try to get the deal done.
So, Lawrence, when we've got a buyer that's getting started, when is the right time for them to get started with you?
Right away. The sooner the better. I like to say it's throwing it all on the table and taking a look at it, right? And that's kind of what we want to do. I want to know what their credit profile looks like. I want to know what their income looks like. Are they a variable type of income? Are they, do they work where they get paid hourly? Do they have bonuses? And also what their savings look like as well. So those are really the three main areas that we want to dive into. And that way, if their timeline is, let's say, 6 months or even a year from now, we've got time to fix whatever it is that might need fixing, or just make them a better borrower, get their credit scores up. We do a lot with credit to help clients with their scores. So the sooner the better is the shorter answer to that
question. So if we're a year out, then it's like I'm gonna go look at houses and then go talk about my financing 60 days out. Instead, let's talk about our financing a year out, even 6 months out if we need to, if that's our timeline, because one credit card could make a big difference in your points and your interest rate. And your credit score, your credit points, whatever you want to call it, and your interest rate that you're currently paying.
Yeah. And we have clients that will be concerned about getting their credit pulled. Hey, why do I need to pull my credit if I'm a year out? And I understand that. Our credit inquiry usually hits their scores about 2 to 4 points. So it's not a huge hit. They regain those points within 6 months. But we can even work with like Credit Karma. anything that somebody has to show us a snapshot of what their credit looks like. If we're a year out, I can look at that and have a good idea of what their credit scores are going to be when we pull it. And more importantly, what kind of trade lines do they have? And what can we do to get their scores up as high as possible? So again, that's the conversation I'm having with the clients as far in advance as possible. Let's get them engaged. Let's get them heading towards being homeowners.
Awesome. Awesome.
Hey, Lauren. So with just my background in nursing, Hometown Heroes has been like a game changer. Can you dive into that just to let them know a little more about the program when it comes to financing?
Yeah, absolutely. Hometown Heroes is the hottest program out there right now, period. If you realtors on the call aren't working with a lender that does Hometown Heroes, then I strongly suggest you make a change. Add somebody into your repertoire. Just so you know, Hometown Heroes is only available through mortgage lenders, not mortgage brokers. So if your lender is a mortgage broker and you ask about Hometown Heroes, he's not going to be able to help your clients with this. But anyhow, so what Hometown Heroes is it's specific to the state of Florida, and it's going to help our heroes. Now, who's a hero? Well, we've got over 99 different job titles that are considered heroes. But the main categories that we're helping are anybody that's in the medical profession, anybody who is considered a first responder, anybody who is in law enforcement, and then anybody who is in education, and then of course our military veterans. Those are the heroes. If they fall into that category, the state is going to give them up to $25,000 towards their down payment and closing costs. In some cases, it's going to pay everything. We've got loan programs that can get people in with very little money down. So this program can actually help cover their whole down payment, and in some cases, all or most of their closing costs. How do they qualify? They have to have at least a 640 credit score, which in today's world, that's not too bad, right? Like that's a reasonable credit score. It's not that high. So we get a lot of clients that will have those scores or higher. And there's an income limit, but the income limit is a lot higher than most down payment assistance programs. In Central Florida, we're looking at somewhere around $125,000 a year is what their income limit is. So as long as them or them and their spouse or whoever they're signing with are below that income limit, then game on, we're good to go. We can get them that help.
Lawrence, where can they find the list of the 99 jobs that qualify for the Hometown Heroes?
Yeah, so obviously I can provide that to anybody that needs it. So anybody that's on the call. In fact, what I'll do is I'll make sure that we have your information, and I'll send an email out to everybody that's on the call. Anybody that you guys talk to, you can go online and just Google Hometown Heroes Florida, and it will take you to the website, and it's real easy to navigate. It's a good site, and it'll have the list of the jobs, and it even goes as far as telling you what certification you require. So, for instance, if you're a nurse, if you have a nursing license, you have to be working as a nurse, and it will tell you exactly what those specifications are, what they're looking for, what sort of certification or license they need to verify that you are, in fact, a true hero in their definition of a hero. Oh,
April, you're muted.
You're muted.
Sorry, guys. Is it the only one that qualifies for Hometown Heroes, or is it collectively like the household income?
Yeah, so it's whoever is qualifying only. So if we have let's say we have a husband and wife, and let's say the wife is the hero, and we can qualify with just if both of their incomes are above the limit, then we're going to look at using just the wife in that case, and maybe seeing what she can qualify on her own. So yeah, we can kind of mix and match with this, which is really cool. It gives us a lot more flexibility than other programs.
So Lawrence, Chenoa, can you tell us about that program?
Absolutely. So that's sort of our default if somebody doesn't qualify for Hometown Heroes. We get a lot of people that are like, hey, I work at a hospital, and we find out that maybe they're in a job that doesn't qualify as a hero. Well, if they're looking to buy a house and they need assistance, then Chenoa is another down payment assistance program, and it's spelled CHENOA. It also offers up to 5% of the sales price towards the buyer's closing costs and prepaid items. So it's almost equivalent in the amount that it's able to offer as Hometown Heroes, but you don't have to be a hero in this case. In fact, there's Chenoa programs that you don't even have to be a first-time home buyer to qualify. So if you have somebody that's looking, they have to be buying a primary residence, guys. It can't be an investment property or a second home. It's got to be them buying a primary residence. But if they need assistance, then this is a good alternative to Hometown Heroes.
So talking about the DPA programs, so when you got Hometown Heroes or Chenoa, typically they market them as first-time buyers. And, first-time buyer, it doesn't mean you have to have never owned a home before, but it's got to be, 3 years?
Yeah, it's 3 years that you've owned a home. And actually, the definition of Hometown Heroes is a little more lenient than other down payment assistance programs. You can have owned a home as long as you haven't lived in a home that you own. So let's say you bought a home 5 years ago and you rented it out, and now you're living with your parents, let's say, and you don't have any ownership interest in your parents' home, then by definition, you're a first-time home buyer. So there's little quirky rules that actually are beneficial to the borrowers in this. It opens up for a lot more heroes to be able to take advantage of this program.
Awesome.
Okay, so sorry to throw all these questions at you, Lawrence. When it comes to, am I still muted? When it comes to getting approved, so potential buyers who are having, not so perfect credit or qualifiable credit, I guess I'm just trying to say, what do you recommend? What's the process when it comes to credit repair, what they need to do? How much does that cost? How long does it take to get them in good standings to be qualified to purchase a home?
Yeah, that's a great question, April. And the answer really varies. It's a case-by-case basis. So when we first talk to a client, what we encourage them to do is to fill out an application with us and for us to pull a credit report. Now, we pull a tri-merge, so we're looking at all three agencies, and we're going to take the middle score of those three, and that's what we qualify them off of. In general, we're looking for at least a 620 middle score or better. We've got programs that can go down to 580, but it's really difficult right now with the rate environment to get somebody an interest rate and get them approved if they're below 620. So what we do is we look at the credit. Let's say they're below 620. We want to look to see how far below they are and how much work they're going to need to get their credit above that 620 or 640. And sometimes we can do this ourselves. A perfect example is somebody who has a bunch of maxed out credit cards. We don't need to send them to credit repair. We need to tell them to pay their balances down. And in fact, we can get copies of the statement showing the new balance, and we can do what's called a rapid rescore, where we don't even have to re-pull their credit again. We can get their scores up by doing this rapid rescore. Usually it takes about 7 days to get it done. And we've seen credit scores improve over 100 points just by doing that one thing. So we're going to look to see if we can do that first. Now, if you've got somebody that's got some challenges on their credit, they've got maybe a bunch of charge-offs, collections, then those are ones that we're normally going to refer to one of our credit repair companies. These companies charge various amounts. We have one company that charges one fee up front. It can range from $500 to $1,000. We have another company that charges per month. Their monthly charge is around $87 a month. They both do excellent work, but it's a commitment from the client to be able to work on getting their credit better. And if they're willing to make that commitment, then these credit repair companies can again do wonderful things for them and get their scores up high enough to where we can get them approved for one of these programs, usually within about 4 to 6 months is our timeline on that.
So Lawrence, question on the when you mentioned I've got 100,000 in credit card debt and I got to get them down to, you know, my 10 cards at 5,000. What's the balance they need to be at to you know, be qualifiable, I guess?
Yeah, where we're seeing the biggest impact on scores is if they're below 30% of their credit limit. That's where we want the balances. And that's on each individual card, right? Not a cumulative of 30%. We really want to see on each card below 30. That's where we start to see the magic happen.
Okay, awesome. Now, guys, I know we've been going on about a lot of things. Is there any questions out there on some of the stuff we've talked about?
I got a question. I got two questions actually.
Okay.
Is the question you answered the question about the hometown heroes and the first time buyers, but how does that affect VA purchasers in the hometown hero program? Do they have to be first time home buyers? And my second question is going to be for people who are, it's going to be outside of the hometown heroes program. It's going to be people who are self-employed that don't have a regular W-2 as everyone else does. So how does that work?
Yeah, two great questions, Dalton.
Thank you, Dalton.
The first one is regarding the veterans in the Hometown Heroes program. I'm so glad you asked that question. Veterans are the exception to the first-time homebuyer rule for Hometown Heroes. Veterans don't need to be first-time homebuyers. They can own a home and live in it and still take advantage of Hometown Heroes. The other thing is, obviously, veterans can, probably the best loan program out there is VA loans, specifically for veterans. It's 100% financing. There's no monthly mortgage insurance on it. The interest rates are really good. So they're able to take advantage of the 100% financing, plus get that extra 5% up to $25,000 that they can use to cover all their closing costs. And in some cases, they can actually use the rest for a part of their down payment on the loan. So we love veterans and Hometown Heroes. That is the perfect combination for us. The second question was, tell me again, Dalton.
The second question is for people who are self-employed, and how do they go about this whole loan process and getting approved for a loan?
Sure. So self-employed borrowers, we're looking at usually a 2-year history of their employment. So it's a challenge if somebody just started a new job and they want to buy a house. I'm sorry, a new company. If they started a new company, not a new job. So if they're self-employed, we're looking for a 2-year history. Now, sometimes we can get away with 1 year. It just depends on what they did prior to opening up this company. If they were in a business or an industry that's very similar, there are times where we can get that exception. But we're looking at tax returns, and we're going to get both personal and business tax returns for 2 years. And we average out that income in order to qualify them. So it's basically the same as somebody who's W-2'd and gets pay stubs. The same process in that we're going to calculate their income. It's just with self-employed, we're looking at 2-year history. Oh, everybody's muted.
Yeah, sorry, I'm clicking a pen and it's going to make noise, and I start talking and I'm like, I got to catch myself on the Zoom there. We've been on enough Zooms; we should know the Zoom rules to have the mouse sitting right over it. So, April, I want to ask you a question. So, because I think Lawrence needs a break. He's been going for the last 20 minutes, and it's all great content because it's stuff we can really dive deeper in with like follow-up questions. Did anybody else have any other questions in regards to what we've discussed so far? Nope. All right, cool. And if you do, speak up or raise your Zoom hand or however you want to let us know you've got a question. All right. So buyers looking at buying a house in 6 months, what is your process for that with them?
I'm trying to get them, I want to get them with a lender just to see where we are. just so they can start working on the process. If they need credit repair, if, you know, what their budget is, what they're looking for, just it's all customizable for the client. I'm taking them out to houses just to show them what the market is, you know, what they qualify for. In 6 months, a lot of times people think like, oh, that's so long, but it's the perfect time. It's the perfect time. You don't know what hurdles you have. You don't know what you need to overcome. So I'm literally just starting the process just to see where we are creating that plan. 6 months is perfect to start.
So example, I mean, I could look at a house in 2 months from now and I fall in love with it and realize, you know, I want to do some work to it. I have some opportunities to stay in my current place while I'm fixing up the other one and not have to worry about that double move and stuff. If I'm renting, if I own, obviously you've got some challenges there because you got to make sure you don't have to buy before you can sell. So what do you do when someone's like 60 days, they look and like, oh my God, we want to buy a house. And like, what's your crash course for them?
Ooh, that's definitely a crash course. Definitely a crash course. But again, we're going to get them with the lender. We're going to get them pre-approved, see what they qualify for, get them out there showing what, you know, the market is constantly changing, even though it's 60 days out. You know, typically, Lawrence, I'm sorry to throw you back in there, but with a 60-day, like typically, how long does it take to close a mortgage loan?
I mean, inside of 30 days right now, we can definitely close every program inside of 30 days.
Awesome.
Okay.
So, you know, kind of piggyback on what you're answering there, April. When I'm talking to the buyers, I will typically throw in like, all right, we're 60 days out. If we get a contract today and it falls apart, now we're at the 45-day mark. And if we get that next contract, it falls apart, we're at the 30-day mark. And we've got to really love that third house because otherwise you're into double rents or you're moving in with your parents or other stuff. So it's like you want to get in contract within like 60 to 75 days of being in a property because it's, you know, it's really timing. You can push the closing out, which is the goal, push it out 45 days and see what you've got to do there. So April, I'm going to throw a question at you. It's the buyers own a home. They need to sell that one before they can buy. What's your strategy for them? How do you coach them on that process?
We're looking at houses while we're selling their house pretty much.
Of course, the market's not what it was, you know, 6 months ago where, I'll list it this weekend, get 6 issue contracts on Monday. You know, it's the normal, let's 30 to 60 days on the market time.
So, I mean, I just had one of those. So, I mean, as soon as we listed their house, we actually went out to start looking.
Okay.
We had a hiccup, but I mean, it ended up closing. Everything was fine. Lawrence was the lender on that one. Thank you. But yeah, just to give that time frame, just so everything kind of, because they needed to close and move at the same time. So we got right into it. They did want to originally close on their house and then start looking because they did need the funds. But we did have a smooth transaction. As soon as their house got listed, we went out, we started looking, we put offers in, and we put a contingency on the sale of their home. So it was perfect.
Cool. So how do you coach someone on that double move?
Pretty much just explaining the process, how it works. Just giving, I mean, the buyers now sellers are actually a little more lenient when it comes to selling their homes. Before, you know, we didn't really have any advantages as buyers. So they were very understanding, a little more lenient when it came to the buyer's needs. So they worked with us very well. We let them know, hey, we're putting this house on the market. You know, I gave them updates on the showings and the offers. And they just, as long as they knew everything that we had going on the back end on selling their home, they were very cooperative on, you know, accepting our offer and moving forward with these buyers.
So that's good. I mean, it's like you're keeping people in touch with each other, and that's what you want to do. The more you can communicate, the better off you're going to be. And then it's like, ding, ding, we're at the closing day. You know, I'm driving to closing in my U-Haul with my stuff. And that's the part you got to unmute yourself.
Yeah, no, they definitely drove to closing in the U-Haul.
Yeah, and it's like, I'm going from one house to the next, and then it's like, I'm homeless for 24 hours or whatever. It's tricky, and it's almost like I was talking with a contractor earlier today about our house that we've got that got flooded, and he's like, I'm 50% renovation, I'm 50% Dr. Phil, and you almost have to play Dr. Phil in that, towards that closing day, because it gets very stressful about doing that double move, and where do we go, what do we do with the dog, what do we do with the fish, and where do I put my kids and everything else. It's like, can we stay in the house overnight, do we have to be out the day of closing? It's all about how you negotiate that contract at the very end. So let's see what else I wanted to ask. So Lawrence, there was a lock and shop program that was out there before. Is that still around, and what is that about?
It is. So the lock and shop program is where you're able to lock your interest rate now, and then it gives you a window to shop. Usually that window is about 90 days.
Okay.
And that way, people that are really concerned about what the market is doing, can protect that rate. It's been super helpful for a lot of clients this year, especially because the rates have done pretty much nothing other than go up all year long. So, it's the same conversation we're having with clients today we were having 3 months ago, which is, hey, if you find a house and it's in your price range and in your budget, get the rate locked in as quickly as possible, because we just don't know where this increase is going to stop at.
So, question on that. So last week when we spoke about a buyer, we were getting a quote of like 7.5%, and then Monday comes around, and that's to say they locked in at that 7.5%. And then we're today or yesterday, when we looked at rates again, it was 6.625. That's almost a whole point difference, and it dropped their payment almost $300 or $400. So I'm locked in at that 7.625 or 7.5%, and all of a sudden I see they go down a point. What does that do for me in the lock and shop?
Well, they offer what's called a one-time float down option on that. So it's for that exact reason. If we see a big market shift, we don't want to lose that client, because the fact of the matter is the client can go somewhere else and, get the lower rate. So we'll honor one time to float that rate down to the lower rate and relock it at that lower rate.
So what happens if I decide to wait it out, and I go to, hoping it goes to the next week, or if I do lock it and all of a sudden it goes down another point, can we just cancel the whole lock and shop with you and then start a whole new application?
You have to wait 30 days to do that, but you can.
Okay.
Yeah. I mean, we haven't seen that happen in a long time. We've seen the opposite. We've seen people that have locked in and they're like, thank you, Lord, that you locked me in, because I'm seeing rates going up again. Every time the Feds meet, they're raising rates more than what we expected. And so that seems to be the trend right now. It's a conversation that we have, and there's no right answer, right? It's like asking somebody when's the right time to buy a stock, right? And you buy the stock, and the next day, it goes down $5 a share, and you're like, but it's the same thing with rates. So more importantly, we're looking at what fits their budget today. And the saying that we always use is, you marry the house, but you date the rate.
Right.
And I think that's never been more true than today. If you love the house, get it. Don't make the rate a concern. Most people end up refinancing every 3 to 5 years anyhow. And I can promise you there's going to be some opportunities in the next 2 or 3 years to be able to refinance and get a lower rate.
Well, you got to think about marry the house, date the rate. And so 2 or 3 years from now, I'm going to refinance. Before, let's just call 6 months ago, in the last 18 months prior to that, people were making offers 30,000 over asking price. And now I can actually go into a seller, negotiate terms, get my closing costs paid, potentially get 10 or 20 or 30 grand off on the house. And I'm worried about, and I want to run numbers on this because I'm really curious to see what it would look like. But if I was to buy this, let's just say that prices were where they are today were 6 months ago, and they're 500,000, and my rates, 3.5%, and now they're, or 3.5%, and now they're 6 or 6.5. And what's my payment difference between what it was, 6 months ago to today? And to get that $500,000 house, I had to offer 520, 530, 550. But the 500 on this one, I can get it 480 or 490. And, am I only paying $500 more a month? And, till that rate changes. And again, that's why I want to run numbers on it to see exactly how much money I would have saved buying today versus 6 months ago, even with a rate 2 or 3 points higher.
Yeah, I mean, it's definitely worth running the numbers and looking at. One of the things that I look at, and probably more so than that, is what are they paying in rent right now versus how much of a house that would buy, right? And I think that's super important. People sometimes will say, "Oh my gosh, it's a high rate," and if they're renting, then I point out to them that their rate's 100%, right? Like that's how much the rate is when you rent. So the other thing that we talk at and look at also is, even with the higher interest rates, one little advantage to higher interest rates is you have more tax deductible interest every year. And people that don't own a home and they've been renting, they don't understand how big of an impact this can make on your taxes when you go to file your income taxes every year. So you're paying interest on that loan and you're paying real estate taxes. And both of those items are two tax deductible items that can make a huge impact on the amount of taxes you end up paying every year. So even people that have a higher mortgage payment than what they're renting right now, in most cases, if it's within a few $100s, it's pretty much a wash with what they're able to save by owning a home and claiming that interest every year.
It's funny, Angie just shared a thing, you're paying 7% on your interest rate, but your rate is 100%.
Yeah. Yep, exactly.
So, all right, April.
So of course, like with purchasing a home, of course, there's other steps, things that have to be done, inspections, appraisals. Todd, what does the inspection process look like?
So typically, when we do a contract on something, we're going to go 7 to 10 days on an inspection. And, I want to get them done as quick as possible, because if I am in that 60-day or 75-day, time frame, I want to get that done. One, so I know if I like the house, I can, I know we're moving forward. If not, if I don't like the house, then I can get out and start looking again. Maybe there's one I looked at while we're, and that's my out in the contract as well. If I need to get out of it, that's like our first step to get out of a contract. The buyer typically has all the outs during the process. I'm typically writing an as-is contract subject to inspection. So when that happens, one of three things happens. One, we move forward. 2, we walk away. 3, we renegotiate. And I'm coaching the buyers on, what does a renegotiation look like? Are we talking about an outlet that costs $50, or are we talking about an AC system that's 10 years old, that's fallen apart, that should have another 5 or 10 years left, or a roof that we thought was 2020, they didn't know the age, then say 2020 being newer, and come to find out it's 15 years old, great shape, but we can't get insurance. Or a 15-year-old roof that looks brand new that, we find out is 15 years old and can't get insurance either. That's my roof on my house is 15 years and it looked great. No leaks, but the insurance company said, nope, got to do it. So time for that new roof to keep the policy, especially in the insurance markets right now, because it's really hard to get insurance. But during the inspection period, there's going to be 4 inspections that we're going to get. 1 is the general home inspection. 2 is the wind mitigation, the 4-point inspection, and then a termite inspection. The general home inspection is going to encompass the entire house and check everything from the roof, the AC, the foundation, the pool, everything. That typical cost is around $350 to $500, depending on the size of the house and the age of the house. Ironically, my 1985 house, that's 2,500 square feet, cost me less than my 1970, 2,000 square foot other house. And because of the age, there's different components they have to check, or different insurance or something. And it's not a huge difference in cost, but there's a cost there. If we got 3 AC systems, because they got to check every one of them. If it's a 5,000 square foot house, that's a lot of windows to open and close, a lot of roof to walk and stuff. And then, if it's a crawl space, that's why I'm not a home inspector. I don't want to get under houses. So the 4-point inspection is going to check the main components of the property. That's the only inspection that I want to send, or one of 2 inspections that I want to send to the insurance company, is the 4-point and the wind mitigation. 4-point being the electrical, AC, roof, and plumbing. And with those, they want to know that the AC's, doing its thing. The plumbing's not polybutylene or one of them that the insurance companies don't like. Electrical doesn't have Federal Pacific or Zinsco or Bulldog or some of the others that John had mentioned to us. And then, if it's got the plumbing, if it's got the hot water heater inside, they want to make sure that it's newer and not going to leak. If it's outside, it can be a little bit older because the potential cause of damage that it can occur. If it's in a garage, it's okay to be older than it is if it's inside. And then the wind mitigation, if it's after 2007, they want to get a wind mit because they want to make sure how the house is tied down. If the house is built after 2007, I think they don't need them. But if it's built, anytime prior to that, they want a wind mit on the insurance. Now that report typically only costs about $125, but will save you over $500 a year over a 5-year term. So people complain about the cost of that inspection, but literally you're saving $2,500 for a $100 report. And then termite inspection, it's always good to get. I don't care if you have a block house, you're going to get termites at one point. And so it's always good to have that second eyes on the house that's there. And that's really, on the inspection side. And when we get it, if we, we just bought a house that needed complete renovation, I did the inspection for the purpose of, is there something I don't know behind the walls? I mean, I knew it needed a roof. I knew it needed plumbing. I know it needed electrical work. But what's going on with the foundation? I didn't know. What's going on in the attic with the ductwork? I didn't know. So those are things that we want to have an inspector look at. So those, if there was a problem, I'd renegotiate.
So I don't know if this question is best for you or Lawrence, but of course, with an inspection, you need insurance.
Yep.
So what does the insurance require as far as inspections? What are they looking for? What reports or what inspections are required to obtain insurance in Florida? So
we're going to send over the 4-point and the wind mit. Again, it depends on the age of the home if they're going to get those or not. And when I'm coaching buyers, my inspector that I've been using the last 22 years always gets the data points while he's there for the house. I don't have to pay for those right away if I don't go forward on the house. So we pay, let's just say $500 for the inspection. And then we look at it, we say, hey, we're going forward. Can you craft the reports on the other two so we can go ahead and get our insurance quotes? Send him his $200 or whatever it costs, and he'll craft those reports. If we decide not to go forward, then it's a matter of I didn't need to waste the $250. I see buyers who call these inspectors and they sell them every report under the sun. They're walking out spending $1,000 knowing that they're probably going to cancel that contract, and they could have saved $500 in inspections not having those reports done. So those are the two that need to go to insurance.
And how soon do you suggest that your buyers start shopping for home insurance?
We used to do it a couple of days before closing. But now it's like, and you probably answered this one too, Lawrence, but I almost need to start shopping the day we start looking at a house. So yesterday I was showing a house that had a flood zone. I was in flood zone A, and I Googled the house before I went out there because there was a second showing. I was showing it for a different agent on the team. And so I didn't see it prior, but I was like, I saw the water behind it. I'm like, I want to see how flooded this house is. Ironically, the water was way back and it water never got into the yard, which is weird with the storm we just had. But I wanted to get a quote for the flood insurance because that can cost $600 or $3,500 depending on what the state calls that floodplain. And so, because that's another worry the buyers have, is it $600 a year? Cool. If it's $3,500, that's $350 a month or $325 a month. I can go buy a better house. So those are things. That's why you want to do that insurance request right away, especially flood, because I can get that quick. Homeowners insurance takes a couple of days to get those policies, and I probably, will get it under contract before, or if we're going back and forth negotiating in April on a deal, I'll probably work on my insurance at that time.
And flood insurance is separate from, that's like an additional policy.
Correct. So if our house in Port Orange, we're right on the bay. High tide came in, high tide came right into the house, and high tide came right back, or low tide came out of the house. So that's a foot up, foot down, and it ruined everything. Citizens who has our main policy doesn't care about the flood. They don't even touch it. So we had to have separate flood insurance for that. So because we have a mortgage on the house, we had to have flood insurance. If I didn't have that, I'd be one of those people crawling to FEMA hoping to give me some money to remodel the house because everything is damaged. If you are in a floodplain, get flood insurance because it's not that much compared to what you got to spend to replace everything.
Yeah, and I'm going to add to that, Todd, and just say, I think after, we all learned a big lesson with Hurricane Ian, flood insurance, even if you're not in a flood zone, I don't think flood insurance is a bad idea to get it. They're starting to really change the way that insurance is handling claims. And if there's water involved, they're going to fight that is considered or was caused by a flood. It doesn't have to necessarily be water rising in your house from the door or anything like that. It could be water coming in through your roof. Even if the roof was damaged, the damage that the flooding caused isn't necessarily going to be covered by your homeowner's insurance. So as a rule of thumb, I'm encouraging every single buyer to look into getting a flood insurance policy. And if they're not in a flood zone, it's super cheap. I mean, it can be what, Todd, a couple $100 a year?
Yeah.
Like that.
Yep.
So it's well worth it for sure.
Yeah, if you're not in a flood zone, you get flood insurance. It's definitely worth getting, just as a backup, because areas that have never, like 2008 when Faye came through, areas that have never flooded before flooded, and now that's why FEMA is stepping in and helping take place on this because of that issue. I had a direct message from one of the people online who said, I heard insurance rates were one of the highest in the nation for Florida, and he's living in a $700,000 house, and he only pays $700 a year. And yes, Florida has got one of the highest insurance rates that's out there because of the hurricane impacts that we have. Plus, there's a lot of insurance fraud that happens, and the insurance fraud is what's killing us. So, for example, on my house in Orlando, we've had no problems with insurance. We just all of a sudden, the last 3 years, we're having to switch insurance companies because they're leaving the state. And I'm with the state policy Citizens, and this storm is a true test on the barometer of what Citizens can take, because it hit, literally across the state. It went from, Fort Myers all the way through Daytona Beach and took out an entire town, plus flooded everything along the beach area on the east and west coast, which normally doesn't happen. So, both of my houses have Citizens. I'm like, and the one that's at the beach has got a Citizens. I'm like, I'm hoping we can do something and they don't go out of business. And then the roofing industry is another one that's kind of not helping our insurance problems here either, because if the roof is 10 years old, now they want you to put a new roof on. So it's constantly being rewritten with the problems that we've got here. So, Lawrence, I've got a question for yourself. Investors that are out in the market right now, we've got a lot of people still want to buy investment properties. And what does that look like on interest rates for investors? Are they getting hit harder? And how are we working around that?
They are, yeah. Not only are the rates higher, but in some cases we're not able to get any interest rate without paying multiple points. We're talking like 3 points, and usually where you're seeing the higher points is with the smallest down payments that they can use on that program. So, for instance, a second home, you can put 10% down and buy a second home. However, the interest rate, even with perfect credit with 10% down on a second home, is going to be probably in the 8s right now. And it's probably going to cost you at least 2 or 3 points to get that rate. The key is to put a bigger down payment. So if you're an investor, my investors right now, I'm encouraging all of them, put 25, 30, 35% down, whether it's a second home or an investment property. And then we're starting to see a little bit, better rates and not as many points at those levels.
Because when we bought ours last year, it's one reason I'm like, I don't want to sell it because the rate's 3.5. And now it's like the rate would almost be double from what it is. Are you encouraging people to look at investment properties right now? Or are you just saying, hey, wait a year, see what the market does?
Yeah, I think people should always keep their eye out for great opportunities. And I'm sure you guys would agree with that as well. There's one thing that has been consistent for the 50-year history that real estate's been being closely tracked, and that's that homes go up in value. And even at our worst crash we ever had back in 2008, everybody that bought at the peak of that crash has more equity in their house now than when they bought it at that time. Yeah. So real estate always survives the test of time. I'm not concerned about where the market is right now. The prices of homes, I think, are in a good spot right now from what I'm seeing. They're stable. They're not crazy. That increase that we were having at the beginning of this year was unsustainable. We could not keep that pace going. I mean, we're no longer seeing 30, 40. April, how many did we have on that one house? How many offers?
Oh, I think it was like 70. And we were 50 grand over asking price, and we did not get it.
Didn't even sniff it. So thank God that market is no longer around. And now buyers have a chance. They have a great opportunity. Not only are we seeing buyers that are the only ones making offers on some of these houses that come on the market, but we're seeing sellers willing to contribute, buying those points or helping with closing costs or reducing the price or whatever concessions they can give to make the deal work. It's a lot better time to buy, whether you're primary or investor, than it's been all year long. It's better now.
Hey, Lawrence, you've mentioned points. Can you kind of just dive into that verbiage and what that means for the buyer?
Absolutely. So what a point is it's 1% of the loan amount is 1 point, and that's a way for people to be able to buy the interest rate down. So if I have a client that comes in today and they qualify, I'm going to look at the rate that's available with no points at all. We want to get them into the house with the lowest closing costs possible, and so once we quote them that rate, they might say, "Ooh, I was hoping, is there a possibility to get the rate lower?" Absolutely, we can look at buying that rate down with those points. The key to this is it worth the money that they're going to pay to buy the point down by what they're going to save monthly on that lower interest rate? And that's a simple equation that it's called the payback period. And we can figure out how many months they need to live in that house in order for that points that they paid to pay off with the monthly savings. If it's, let's say, 3 years or less, then usually that makes sense for them because that's the time period that most people are going to stay in the home. Of course, we ask that question and most people go, "Oh, this is going to be my last home ever." And, 5 years later, they're selling it and moving to another house. So we like to look at what the averages are, the national averages that most people are going to buy and sell or own a home 3 to 5 years. And so we're looking to see if that payback period is less than that. If it's more, in most cases, it's not really worth it. And the thing that we're looking at now as well is, let's say you take the higher rate and you got a higher payment. Well, you saved a lot of money by not paying those points. And in 2 years, 3 years, whatever, rates go way down. Well, we're going to be able to refinance you. And if you had paid those points, that's money you're not going to recoup when we do that refinance. So it's a good math equation. It's a conversation I love to have. It's probably my favorite part of the job, is having these financial conversations because it's so important. And sometimes people get so fixated on what's your rate, and they're overlooking a lot of other factors that go into that equation of whether this is a good financial decision for them or not.
So that's a good question, a good statement you just made that I want to pick on. What's your rate? What's your rate? And yes, last week you're quoting me 7.6, and then Monday you're quoting me 6.7, and then I got a buyer telling me I just got off Rocket Mortgage 6.1. Why is Rocket so much cheaper than you? And we always see that. And tell us about the hidden stuff that's going on there.
Yeah, well, we love to make fun of Rocket because we say that, unfortunately, that rocket blows up right before closing a lot of times, and we end up rescuing the deal from Rocket a lot, and that's a whole nother. We'd have a whole nother.
We don't have enough time for that conversation.
Yeah, but I think the important thing is that there's a lot, like I was saying, there's a lot more to the equation, and having somebody that can go through this thoroughly with a client and explain to them, not just somebody who's going to quote a rate and then move on to the application. Even the different types of loan programs, everybody thinks a 30-year fix is the best program, and in a lot of cases it is, but some cases there's much better programs out there for clients. It might be a shorter term loan, like a 15 or 20-year fix, or it might even be one of our hybrid arms that we have where it's fixed for 5 years and then it becomes adjustable, and the rate might be lower to start off with. So comparing all these different programs, sitting down and really doing that analysis, is conventional or VA or FHA, what's the best program? Each person is different. Their criteria is completely different from another. So it's not one size fits all in our business.
Yeah, no, it's perfect. And that's what I wanted to I want to almost pick the buyers up and be like, don't go online and shop because you're not going to see all the details in the background. You got to speak to someone local. And why I like local, because I can walk down to your office and shake you and figure out what's going on. Underwriters too. I like doing that. I mean, I don't like shaking people to find what's going on, but I like knowing that it's handled locally. The money stays locally. And if there's a problem, I can call you up and get you on the phone or see you on the streets and say, hey, Lawrence, you're dodging me. What's going on? I've actually knocked on a lender's door before when he wouldn't answer his phone. And we're all the way to closing and he's like MIA. And then he didn't expect me to show up at his front door.
Well, another big thing too, and I think April and I see Dalton's on the call, he'll even attest to this. If we have a pre-approved buyer, first of all, my pre-approval is super solid, right? Like when I give that to you guys, I've got all the documentation from the client. We've already reviewed it. We've pre-underwritten that file. So it's super strong. But the other thing is when you go to make an offer, especially if there's multiple offers on that house, I'm going to call the listing agent and talk to them. And I'm going to tell them how strong of a borrower this is, that we can close inside of 30 days. I'm going to help sell that deal to that seller and the seller's agent. Good luck getting Rocket to do that. They're not going to do that. So it's a big advantage in this market. All year long, this has been a huge advantage for our buyers to be able to get their offers accepted. And sellers, agents will, I'm sure you guys love it when you get a lender that can call you and talk to you about the criteria of that buyer that's looking to put an offer on that property.
Yeah, no, we appreciate it because it doesn't help. Because it does help that you do that because it's the local connections. When you've done business with April before, and I get an offer from her, I go, "Oh, it's Lawrence. Okay, cool. I know this is going to go forward." Especially because we still do get multiple offers, and I can say, "Hey, I'm dealing with a good agent April over here, and I got a good lender over here, Lawrence. It's going to go through." Versus this one over here that I don't know that person, and I have no idea who that lender is because we've never even heard of the company, let alone the lender. Yeah. So. Well, as we're wrapping up, is there any questions from the audience out there just on things we've discussed? I know we didn't break before when I did on the beginning. If not, guys, I appreciate your time. April, thank you for being on here, throwing some Q&A back and forth. And Lawrence, same thing. You want to drop your contact info, and then we'll wrap up.
I have a question.
Yes, Tammy.
So I know this is being recorded. Will we be able to watch this back? Because this was a very good Zoom, very informative, and I really would like to be able to watch it back. And also, Lawrence, would you be able to send me some more information on the Chenoa, on like a pamphlet or something like you did before when we first met? That you sent me all those pamphlets.
Yeah, 100%. In fact, Tammy, I'll do you one better. I've got some really cool flyers that I can co-brand with you. So if you're interested in that, I'll get you with my assistant. We'll get your information, and you'll be on that flyer with me, so you can hand those out to your potential clients as well.
Okay, can we do that with Hometown Heroes as well?
Absolutely. I've got Hometown Heroes. I've got a bunch of 100% programs all in one flyer. That's got Hometown, Chenoa, the Florida Bond, and then I've got that flyer I was telling you about. Rent versus buy, and it shows a chart of what people are paying in rent and how much of a home they can afford. Those are just 3 of the flyers that I can mention right off the top of my head that are super popular right now.
Okay, that would be great. And then what about the recording of this?
Tammy, if you want to shoot me a DM with your email address, we'll make sure we get you a copy. We'll figure out. Okay. I mean, we've got to get it downloaded, and we're going to edit and cut the beginning out, and we'll get it up for everyone. But yeah, if you want to shoot me your email, we'll get it over to you.
And how do I email you?
Or just send me on the chat. Just send a direct message to me.
Okay. Thanks.
And I'll get it written down. Cool, guys.
Okay. Thank you.
Well, I appreciate everyone. And if there's anything, feel free to reach out to us. Gabriel, you want to drop your contact info? Just tell us how to get a hold of you. And Lawrence, the same thing. Anybody want to get contacted, Lawrence, throw us your info as we're wrapping up.
I'm sorry. Yeah, guys. So the best way to reach me is my cell phone, which is 407-448-3303. So it's 407-448-3303. My email address, it's too long to say it on here. So call me, shoot me a text message, and I'll send you my email, and we'll hook up from there.
April.
Email and Instagram. So it's April the Realtor, the #1 on Instagram, and then April@Team Schroth is my email address. Feel free anytime to reach out.
Awesome, guys. Well, appreciate it, and we will get this recording out for everyone if they want to watch it again. And then Tammy, shoot me that DM, and appreciate everyone being here tonight. Thank you.